now that we've gotten to, we're essentially 2 years removed from the pandemic at this point, right? What's the deal? Is this a situation where we're going to see more downside in Lulu? Can we count on that? Or is this just a blip? Is this just one of those situations of we're heading to a theoretically recessionary environment? People aren't buying clothes as much, and there's been a lot of markdowns in the retail space more recently on clothes. They've had so much inventory that they've had to kind of mark down, and Lulu is not immune to that. As a matter of fact, if you ask me, they need to. I have a friend. You guys know my friend. Don't tell him. No, it's not Tom or Tony. And loves Lulu. He's never going to watch this, that's why I can say this. Loves Lulu. Oh, my God. Everything Lulu is great. I try to, as a good friend, I try to talk him out of buying Lulu all the time. You don't need this $100 hoodie. You don't need these $100 and $150 sweatpants. But he always wants to do it. Maybe my friend now can wait. And you know what? He has me to thank. I've saved him a lot of money by not always going there. Now, they're going to mark down more clothes, I would imagine. And these things are going to get a little bit cheaper. I mean, an $85 hoodie is still a lot, in my opinion. Macy's also had they didn't guide, but basically, I mean, this is a guidance in a way when they talked about their holiday sales being a whole lot weaker than they anticipated. There was a lot deep markdowns here as well. And so, you put these two stories together and you start wondering about retail. Is this, retail can be cyclical, but is this a concerning trend going forward, or is this just one of those sort of blips in the radar for the time being? And is this something that is going to rebound a little bit? As far as Lulu goes, I don't think this is immediately the downfall quite yet. As much as I spun the yarn a second ago, I do think maybe there's a possibility that Lulu could bounce back. Whether I want to play them on earnings, I do not. But I did put in a little trade, and maybe we'll get to that later on in the show when we get to the platform. In the meantime, leftover. Speaking of commerce and e-commerce, the biggest e-commerce companies in the world. Let's move to the next slide. First, this is in billions, of course. This is the revenue over the past 4 quarters. You got Amazon at $502 billion. Jingdong Mall, $155 billion. Obviously, it's a Chinese company. Obviously. I mean, unless you know of one of those in like Seattle or something like that. I ain't never heard of it. Alibaba, $126 billion. Meituan, $30 billion. As you can see, most of these obviously are in China. You got, a couple that are in India as well. But Coupang, $18 billion. Pinduoduo, which is obviously PDD, a stock that we know very well. One of the Chinese stocks that have been on the move, $16 billion. Vipshop, I believe that's Indian, $16 billion. Rakuten, $15 billion. I know a couple of friends who work for Rakuten. And I believe they're a big sponsor of the Golden State Warriors, right? Steph Curry's always in their commercials. I've seen those. Wayfair, $13 billion. Sea, $12 billion. Zalando, $11 billion. You get the rest. So these are some of the biggest e-commerce companies. Obviously, Amazon has just been crushing it, man, for quite some time. I mean, when you're bigger than, a lot of these Chinese companies, that's saying a whole lot. Let's move to the next slide. So looking at volatility, there really hasn't been much to speak of, right? I mean, volatility's been, it's still above the long-term average. I mean, whether you're looking at just regular spot VIX, just slightly probably, spot VIX today is it's trading, or I should say is measuring 2178, and whether you're talking about spot VIX or whether you're talking about VIX futures, January VIX futures is currently 2240. Long-term average, let's just say, is like 20, right? Those are still above, but it's still fairly low. And I continue to say this is kind of a good environment for trading options if VIX is just above the long-term average and markets are actually kind of moving around a little bit. This is a good environment to trade. Trust me. Believe me when I tell you that. Nevertheless, when you look at the last 4 weeks, VIX futures have declined. I mean, the orange line you see here, the green line and the black line are all consecutively, the last 3 weeks prior to this week of trading. And then you see the current VIX future structure is lower fairly than a lot of those. So vol was actually a little bit elevated in the middle and towards the end of December. We know that. Things have calmed down quite a bit. So where do we go from here? I don't know. I will tell you, I think... I don't know yet. I'm interested to see how much this next CPI report factors into this. So that'll be fascinating to see. But I I am laughing at the chat. I contend that VIX being in this 21 to 22 range, I think is a good thing, especially with catalysts coming up. We got obviously the CPI report, we got the FOMC. Well, that's in February, but we got earnings starting to come out later this week, and starting next week, we're going to get the earnings season rolling along. I think it could get a bit interesting and busy. Everybody's expecting earnings to suck. I think just like the last couple of quarters. It'll be interesting to see. I think it might change a little bit. These things, past performance is not a predictor of future results, as they say. Let's move ahead to the next slide. By the way, if you are watching the show on the Tasty Live YouTube page or on the Tasty Live app, you can come to the if you're watching the show on the Tasty Live webpage or the Tasty Live app, you can go to the Tasty Live YouTube page. And I will be right there. There's about 42 of you in there right now. And you know what? There's only 4 likes. 4 likes, 42 people. Something's not, adding up. That's the low ratio. So let's get that like to watchers ratio up right now. Like and subscribe. That's the only way you're going to get more of this content. There's better stuff than me on here. I can promise you that. And got to say what's up to my people in the chat. George B, what's up, man? You prefer Patagonia over Lulu? Yeah. Yeah, I can see it. I'm really not into Lulu at all. Despite the trade that I made today, I'm really not into it. I just feel like a lot of their stuff is a little bit overpriced for me, but, it is what it is. So, yields. Obviously, we had a big drop in yields. Yields have really been the driver. Yields going higher has been the driver of downside in stock market, right? The other day, we had a big move on Friday, right, in the stock market, nearly up 100 points in the SPOOs. I'm surprised it didn't go up 100. As a matter of fact, we faded until the end of the day. We just touched the 50-day moving average, and then we faded. We're above that today, I think. We ended up going above at least for a little while. We're right back at it right now. But nevertheless, that created a big down move in the 2-year yield, which, of course, is the biggest proxy for what's going on with the Fed funds rate. And I tell you, there really hadn't been too many big down days quite like this. I mean, there's been some close, right? But when you look across the past year, yields were down almost 5% on Friday, and we haven't seen a ton of those. There's been a couple, I guess, but not too many bigger moves, we should say. It looks like 1, 2, 3, 4, 5 over the past year. 6 if you, maybe 7, I guess. But nevertheless, it was a big move on Friday, down in yields. And why do we see that drop? Well, I guess if you believe the narrative of the wage growth thing, and you believe that wage growth is dropping, and you believe that, maybe that the Fed is going to have to start to look at how high we are or how close we are to the end of a hike cycle. That's one of the main reasons why I think yields dropped. There was that sort of moment where it says, hey, maybe yields aren't going to go quite as high. I wouldn't put too much credence into it because every time we've done this, yields jump once again. So as of right now, they're saying that theoretically we're going to have a 25 basis point hike in February and another 25 basis point hike in March. And that essentially gets us to almost 5%. Because we're at 4.25 right now, right? So we'll have to wait and see. Let's move ahead to the next slide. This is what we got, folks. This is our SPX forward-looking curve. Gives you an idea of where to expect some volatility over the next couple of weeks. I only have up until the end of February here, but you can see the vol point for the CPI report we got coming up on Thursday morning, if you will. We'll see what happens there. These have been fairly volatile, as you guys know, or if you don't know, if you haven't been following the market, these have been some of the more volatile days over the past year. We got, November, I think it was like November 10th, well, December 12th. I don't remember. You can look at the stock chart and see it, but they've been some really volatile days, right? In the CPI. I think I want to say like the December 13th was one of the last ones that we had, and then November like 10th or something like that, and October 13th, like somewhere around there. They're usually around this second week of the month. They've been really volatile. So I'm curious to know, is this going to be a trend that we're going to see for another couple of months? As long as inflation / potential, recession is in play, or is this thing going to start to calm down? We have FOMC coming up too. That's going to be the 1st of December. And then we got the January payrolls on February 3rd. So those are the next couple of big events over the next few weeks. We'll see what happens. Let's move to the next slide. I am going to be busy and during all of this. I told you guys I'm going to be coaching basketball team. As a matter of fact, 2 basketball teams. As a matter of fact, 2 basketball teams with 3rd and 4th graders. I might lose my mind. I don't know yet. Earnings. WDFC. Isn't that WD-40, basically? Yeah. That has earnings coming up. Wow, I didn't realize that was $160-something stock. Good Lord. What else do they sell besides WD-40? ACI, that's one of the coal companies that, the coal companies have been kind of quiet over the last year and shit. Oh, never mind. No. I'm thinking of an old company. ACI is Albertsons. Remember, Albertsons is kind of smack dab in the middle of this merger with Kroger. Whether or not it's going to happen, a lot of people don't seem to think so. There's a lot of stores that would be combining. Can you say antitrust? Maybe. Jeffries is the final earnings. Other than that, not too many earnings going on. Powell is going to speak in Stockholm on Tuesday. We'll see what he possibly says, and that might affect markets. And then we got December CPI on Thursday, of course. We're looking to see what kind of volatility that brings. Then the bank earnings start coming. We got Wells Fargo, you got JP Morgan, you got Bank on Friday. Speaking of bank earnings, I did watch some of that Madoff show on Netflix. My oldest kid was pretty interested in it. He's a freshman in college now. He's a little interested in these type of things, and so he was interested. He started talking about it. He's watched it. He watched some of it. He wanted to watch some of it with me. He was asking questions. It's pretty cool. And you know what? I remember those times. How can you not forget the day Madoff? Man, it was a wild day when he got pretty much caught. But that's an interesting saga. I'm sure some of you are watching the show. If you are, check it out. Number of S&P 500 stocks above the 50-day moving average, 355. I tell you what, a day where the market is up 90 points can really do a whole lot for this metric. This thing was about 43%, and now it's up to 70%. To the platform, please, Batman. So let's take a look at SPY. Talking about events. We got it queued up right here. The 390 straddle. Well, let's go to 389 now. Doesn't make much of a difference, but why not? SPY's trading 389. Let's look at 389 straddle. Oh, what do you know? Same. For those who don't know what I'm doing right now, anytime you want to get an idea of what kind of move to expect in either direction, up or down, in any particular asset, just look at the option straddle. At the money straddle. Right now, SPY's trading 389, so we're looking at the 389 straddle, and we're going 897, which is currently what it's priced at, divided by 389, and that will show you 2.3%. And what that's saying is that the market is pricing a 2.3% move between now and the end of the day on Thursday. Why did I look at Thursday? Well, remember, we're looking at the move for the CPI report. As you can see, if you look just a couple of days earlier, this is on Wednesday for 3/11. I'm sorry, for Jan 11, and this is $4.94. That's way lower, right? That's probably 1.6% move, expected move in the SPY between now and the end of Wednesday. No event between now and then, and so that's one of the reasons why there's not a big deal there. So 2.3% move is expected. And again, just when you look at Wednesday, you can see 1.6 expected. So there's a decent amount of premium baked into that Thursday move. We'll see if it ends up materializing. But SPOO's kind of treading water thinly now, only up 8.5 points. NASDAQ still up 1%. And Russell 2000 up 0.3%. Yields down another day, man. 2-year yields down to 4.15 now. 5-year yields trading 3.6, and 10-year yields trading 3.52. What's that? About a 60 basis point difference between the 2s and the 10s. It's far from the bottom. We saw about an negative 82 basis points between 10 and 2-year yields. 1 point late last year. Now it's about a 60 basis point difference, negative that is, between the 10s and the 2s. 30-year yields trading 3.64%. And then we talked about volatility. We got 22.35 bid for January VIX futures and 23.10 It's about 75. About 0.75 point difference between Jan and Feb. Contango, as we can see, and March is 2370. So we've been in contango recently and for quite some time, like we just showed in the VIX futures montage we looked at a second ago over the last 4 weeks. So things have been fairly quiet. Yeah, thanks, buddy. Yeah, I was thinking Archcoal, ARCH. It used to be, I want to say it used to be ACI, but I forgot. That changed years ago. I'm old, man. I forget these things. You know what I'm saying? Crude, like I said, crude was up way bigger this morning when we were looking at it. Initially started the day a whole lot higher, but has retreated some. Was as high as 76, 73, but has pulled back a decent amount. Nat gas is trying to rebound after just, God, an ugly set of several days. Going back to the 15th, I mean, nat gas was largely in the downtrend. We'll see if it ends up changing course. Look at Bitcoin. Bitcoin is trying to spread its wings. How many days is this? 1, 2, 3, 4, 5, 6, 7 days in a row that Bitcoin has been up. Some would call that a trend. Ether, 13K. You know, it hasn't been up quite 7 days in a row. There's been 1 day down in between there, but you get the picture. I mean, it's been strong. Cryptos have tried to put together a little bit of run recently, and I talked about this last week. I think it's just a lack of bad news, which of course is good for them more recently. So gold has been sort of in this strong uptrend too. I'm starting to get, I would love to follow this uptrend right now, but I'm just not quite interested yet. I really want to see more of a breakout in gold, either to the upside or downside, before I really get interested. I don't want to get lulled into this false breakout. I do tend to get interested in these type of things, and then next thing you know, it fades. I don't want to get lulled into a false insecurity in this breakout. Silver, trading 23.80. A little bifurcation in gold and silver right here. They're not moving in opposite directions today. Kind of fascinating. I haven't looked at soybeans recently. Look at this chart in soybeans. It looks like it's directionless as of right now. Not really showing me much. Corn, kind of the same. I don't trade these that much, but I usually rely on, hearing other things about it, or if something's actually happening in those spaces. And I really haven't heard much about soybeans, corn, or wheat more recently. Things have been fairly quiet. Then, of course, we get the bonds, a little positivity. And you got to wonder if the idea, the ability to play the 60-40 portfolio is going to come back, because bonds have tried to bounce more recently, while, obviously, I should say, they've been, again, we're seeing bonds bounce, treasuries bounce down there, while the markets have been fading, and that's kind of the metric. That's kind of the metric we've been used to over the years. We'll see if this is something that continues. Anyway, let me see. The last time I talked to you guys, I'm trying to think what I've done. I did close out. The last Baba is the last thing you probably saw me trade. I did close out. I did put on this LULU trade that I talked about today. So I decided to put a calendar spread on, the 320 calendar spread. Why? Well, it's almost like I'll tell you why, because obviously the stock is down, and that's one of the reasons I was interested. IV rank is fairly low, so I wanted to get long. Why did I choose a 320 strike? Well, one of the reasons I was interested is because I feel like that's where some of the action is. If you look at the chart and you look at the current measures of where the 200-day moving average currently, which it fell through strongly today, is right at 320. So I wanted to put my calendar strike for both options right around that area, and so that's why I chose to do 320. Around 30 delta in the February, and maybe a little bit more in the 320, but I figured this would give me a good entry point, and it would allow me to make a good play on it. So that's my trade for the day. Anyway, folks, thanks for watching the show, and as always, be smart, be patient, trade small, trade often. I'll see you guys tomorrow, all right? Later.